Welcome, dear traders. You are watching a recap of the Asian trade on April 5 with me, Kate Stichina. Stock markets in New Zealand, Australia and Japan traded lower in response to negative signals generated by Wall Street earlier. Investors are looking forward for crucial statistics from the United States. Today, the economic calendar contains a series of important economic data such as the ADP employment report for the US private sector and the ISM non-manufacturing PMI. JOLTS's job openings report released yesterday showed that the number of vacancies dropped to the lowest level since May 2021. For stock investors, waning business activity and a slowdown in employment in the world's largest economy indicates that the US Central Bank could soften its hawkish monetary policy. However, Fed's policymakers still deliver hawkish messages. For example, Cleveland Fed President Loretta Mester and St. Louis Fed President James Bullard said yesterday that the central bank was ready for more rate hikes. Stock markets dispelled fears that the recent bank crisis would not infect the broader banking system. The US dollar has got stuck at nearly 2 months' lows today. Its index, which measures the greenback strength versus 6 major currencies, was unable to recover after yesterday's slide. The US dollar index fell to the lowest level in 5 weeks on Tuesday. It rebounded to 101.54 in the Asian session today. The US dollar was also affected by a fall in the yields of US Treasuries. The consolidation of the US dollar index in a range between 101.40 and 101.60 signals market optimism in anticipation of the US non-manufacturing PMI and the nonfarm payrolls. Most investors await softer data than a month ago. In turn, this could assure the Federal Reserve to soften its aggressive monetary policy. Market moves in Asia were subdued on the back of public holidays in China and Hong Kong, and the dollar-yen pair traded quietly in the morning. However, traders are braced for a turbulent day ahead. Japan reported a stronger than expected services PMI, and now all eyes are on the US services sector and employment in the private sector. The status of the US dollar as a reserve currency has been challenged, and this fact arouses hope among the yen's buyers. The dollar-yen pair slipped to 131.40 on early Wednesday. The yen also finds support from lower yields of US Treasuries. At the same time, yields of Japan's government bonds surpassed the threshold level of 0.5%. When this happened last year, Japan's monetary authorities intervened in forex to prop up the yen. This week, a new governor and the board will take over responsibilities at the Bank of Japan. The regulator is unlikely to review the previous ultra-loose monetary policy, so the yen will remain vulnerable to global events. For the time being, the global environment benefits the yen. It's trading in the corridor between 131.20 and 131.90 against the US dollar. While the market expects the US Fed to make a pause in rate hikes, the Reserve Bank of Australia maintained its status quo on interest rates yesterday. Nevertheless, the central bank's governor warned about the further rate hikes. In his speech today on the prospects of a monetary policy, he said that further tightening is in the cards because high inflation should be brought down to the target level in a reasonable time. The Reserve Bank of Australia set the annual target rate for inflation at 2 and 3%. The CPI in the fourth quarter of 2022 jumped to 7.8%, the highest reading in the last 30 years. No doubt more rate hikes are on the central bank's agenda. The regulator decided to make a pause in April for a careful assessment. Governor Philip Lowe said that the central bank would revise its monetary policy at the nearest meeting in May. Taking into account fresh inflation and macroeconomic data, he also stressed that the future policy decision would be adjusted to global headwinds, such as the global economic outlook and the fallout from the recent bank turmoil in the United States and Switzerland. The Australian dollar did not find support from remarks by Philip Lowe. On the contrary, the Aussie nosedived in the Asian session and sank to 0.6700 against its American rival. The Australian dollar weakened because investors are cautious about risky assets ahead of the crucial data in the United States and because China's economy is underperforming. Such factors are bearish for the Aussie dollar. The AUD USD pair traded in the intraday corridor between 0.6695 and 0.6779, and there are no signs of a trend reversal. The Aussie is still in the grips of the bears. While the Australian regulator is making a pause for toss, assessing the effect of its policy moves, the Reserve Bank of New Zealand came up with a hawkish surprise. Defying expectations, the regulator raised the key interest rate by 50 basis points at a time. Now it stands at 5.25%. All in all, the New Zealand Central Bank has increased interest rates by 500 basis points in 11 meetings since October 2021. The regulator accounted for such an unexpected aggressive decision by the fact that inflation has firmly settled at elevated levels. Following this hawkish surprise, the New Zealand dollar spiked. It advanced to 2.6300 against the US dollar and the highest level in 7 weeks. However, the Kiwi is too sensitive to external headwinds. Besides, economic conditions in New Zealand are far from steady. So the Kiwi lost bullish momentum while it was trading in the range between 0.6302 and 0.6375, and it pulled back from the highs in the late Asian session and slipped to 0.6316. Follow developments in financial markets on the InstaForex TV channel. We are open for discussions. Leave your feedback and ask questions. Stay tuned.